Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Tuesday. We got some numbers today and so forth. Let's come over real quick. Look at what we're looking at on the different markets. I am a little bit behind here this morning. Oh no, my headphones don't sound quite right. Oh, that's okay. We'll get on with it. We'll deal with it. Okay, so yeah, over here in the treasuries, kind of flat overnight. We did have some downside action yesterday, though. Coming into the S&P 500, pretty good day yesterday, giving a little bit of it back in the overnight, but nothing too extravagant. There was a lot of numbers over in Europe, though. Oil, kind of in a range, I guess you could say. It does kind of look like something could happen over there, but it's not happening yet. Gold and silver still pushing. Well, silver a little bit pulling back, but gold just like up at those highs. Kappa doing pretty well. The metals all following each other quite nicely. And we come over to the currencies. Bitcoin still just kind of treading water here above 2,300, and the dollar continues to hover just below 102. Treasuries, we're seeing some immediate upside here in the treasuries this morning. That's just kind of curious. Okay, we did just get, okay, so we don't have any 630 numbers, but we got some PMIs coming later. So I want to keep those in the back of our minds. But that's not until, that's not for an hour and 15 minutes, so. Let's see here. Brannigan Barrett, I've seen some pretty smart folk basing a bull-bear thesis off a trend line in the S&P 500. Whilst technical analysis has its use case, it is nothing more than a depiction of buy-sell data. To suddenly turn bearish because we close above a man-made line is utter silliness. Market trends do not suddenly change because of a little white line. Sure, there can be some short-term price volatility and position squeezes, etc. But a close above 4,000 does not change the fundamental trend of the market. Actually, I don't think that it changes the overall trajectory of the economy, but there are a couple of programs out there that do appear to be flipping around 4,000. I wouldn't trade off of it. Wouldn't day trade off of it, but the longer term action is going to be determined by the orders. So, okay, so some strong uptrend here to start, but giving us a solid pullback. Wow, the 10-year is already back below 3.5. That's a little weird. Mohammed A. El Arian argues why passive investing strategies make less sense in current market conditions. The story on the Financial Times. Oh, I wish I could read that. Good morning, Uzi. Morning, Meishan. Ooh, it's going to let me read it. Should the vehicles that investors choose to place their money be a function of their investing environment? This question is not asked often enough by investment communities, which tend to focus on asset allocation issues, model portfolios, and manager selection. Yet, it is a question that has become a lot more important for generating high risk-adjusted returns, particularly given the massive shift of money from active to passive investment strategies in recent years. A simplified illustration of why this is the case comes from my student days armed with Eurail type pass. Eurail, is that supposed to be like Eurail? I don't know how you say that. I traveled the European continent and, like many others, took advantage of the fixed menu offered by restaurants. They were diversified, low priced, and did not require much local knowledge to choose from a long list of dishes. In short, it was a good way to fill my stomach and keep expenses down. This is by Mohammed El Arian writing it. I suspect that I would have behaved differently had the digestion-related risks of these menus been greater and more variable. In such a world, I would have placed much greater importance on menu differentiation. I would have put myself with a better understanding of local ingredients and dishes. More active management of my meals would have become a priority, including a more educated approach to individual menu selection. In other words, you know, you might not, in 2021, you probably didn't want to have tech in your portfolio, right? Man, it's coming back hard here in the treasury market. This right away has me all sorts of confused. Not sure what to do on this one. Probably going to turn into some huge monster trend that we miss, huh? Having opted in mass for the fixed menu approach, investors now need to pay more attention to individual security selection, given ongoing shifts in the investment environment. Passive portfolio management is particularly attractive in a world where investment outcomes are heavily influenced by a common global factor. This was the case for more than a decade as a combination of artificially floored interest rates and massive injections of central bank liquidity boosted virtually all assets. Even zombie companies and frail sovereigns could refinance without much difficulty or internal reforms. Positive correlations within and across asset classes rose to unusually high levels. The generation of high returns and lower volatility did not seem to require a lot of individual investment selection, making passive approaches much more attractive, especially given their lower fees relative to active management. The resulting large-scale demand shift to passive investing generated two supply-side reactions. First, more asset managers entered the space, increasing price competition and dramatically driving down fees. Second, some managers extended the offering of index-based passive approaches to much less liquid and higher-risk segments of markets that are more subject to dislocations and default risk. This common global factor was first shaken and now dislodged by rises in inflation that have required central banks to hike rates and reverse injections of liquidity into the economy. Outlook for investors is further complicated by growth risks as the three most systemically important economic areas globally, the US, Europe, and China, have slowed a bit for different reasons. In addition, the investment world is being impacted by major structural shifts, including disruptive technological innovation, geopolitical tension, and a reordering of supply chains and strains to social fabrics. This is a fluid world in which price overshoots become more common. Indeed, investors would be well advised to refresh their understanding of The Market for Lemons, put forward by Nobel laureate George Akerlof some 50 years ago, and related work by Michael Spence. Easily applicable to the insurance industry, where information asymmetries between insured and insurer can be pronounced. Another example of this phenomenon is the difficulty that sellers of carefully maintained cars have in securing fair pricing when there is a lot of noise about autos being reconditioned. Their cars will probably trade at excessively low prices. It's what is he getting at there? Market prices do not reflect all available information. In what many recognize as a murky global macro outlook, cherries can trade like lemons. Moreover, passive strategies extend to market segments with low liquidity and challenged creditworthiness become traps by incorporating too heavy a component of default-sensitive corporates and sovereigns. In short, this is an investment world in which greater selectivity, smart structuring, and dynamic asset allocation trump more often the lower fees on passive vehicles. It is a world that warrants partial return to a la carte selection after many years of widespread fixed menus. Doesn't really help if you're an asset manager and you're wondering how to navigate this world. Like that's kind of the issue still, right? Is that this environment has been incredibly difficult to navigate. And even those of us that saw the inflation coming in 2021 and the Federal Reserve and all that sort of stuff still had a hard time, generating those returns because the individual assets didn't necessarily play out the way that we wanted. I mean, the ones that if you just went short some things, like if you just went short tech, then you're great, right? But looking for something that was going to do well, you had oil. But then oil came back big time. So it wasn't all that, It was still good. I would still rather have been in oil than anything else, but you get where I'm kind of hinting. It's hard. It's like he's not the first person. Mohammed El Arian is just latest in a long string of asset managers saying that the passive approach probably doesn't make as much sense in this environment. But it doesn't answer the question of what do you do? How do you navigate it then? How do you find, because most asset managers are still going to underperform the market, right? Well, S&P 500 taking a bit of a dive there. We're still above 4,000, but it's looking a little ugly there. I'm wondering about this buy that we had right on the market open. It didn't really overcome the selling that we've had in the overnight session in the Treasury. Let's come over, take a quick inventory of things, even though I know it hasn't even been 15 minutes, but so when we look at our treasuries here, see there's this big push up in the 30-year, but you didn't really see it in the other instruments. So it could be part of a flattener. You can see these are all flattening. When we come up here to the S&P 500, you can see that that's a pretty significant sell we've seen in the last 10 minutes or so. Also coming over to the Japanese yen, for instance, not really moving a whole lot. Copper, although, appears to be moving. So market still kind of in a holding pattern, but kind of giving us hints that there might be something coming here. They look like they're prepping for something. It wouldn't surprise me to see, yesterday was kind of the Monday, and especially with the gamma unclench, I guess you could say, long was a good bet yesterday, right? Now a lot of those flows continue through, so I have a hard time just being outright short, but because that gamma was one of the strongest things that came and now should be rolled off, the chances for the shorts are a lot better today, right? I don't know if it's the way that we look at the flows that it's we should go short today in SPOOs. I would really hesitate to go that far. But we should just be aware and watch it coming, and if the flows come, we might just need to go along with it in the E-mini. The treasury is looking a little bit heavy at the moment. That buy came in and they're coming all the way back very easily. I'm going to reset my columns here so that I can kind of see where we're trading from this range. Oh, that's funny. I'll save this that story that just popped up for another day, actually. Yeah, maybe I shouldn't say anything because then you'd be like, oh, now you gotta tell us. But no, I'll just. Wow, unlocking the true potential of webcams. I'd like to watch that later. Now they're sitting there at the lows. 1,000 at 25. So it looks like Now that we're like going to be breaching the open and like the swing lows from just before the open, there is a little bit more liquidity. Let's see how easily the market orders cut through this. 1500. Not liking the spread in the 10-year. I'm not liking the spread, but 3.5 seems fair. I do kind of wonder with the E-mini falling so hard. I don't see any like headlines or anything like that. Oh, did we get the Philadelphia Fed there? Why is it telling me about Philadelphia Fed? We get Richmond Fed at 10 o'clock. We are getting a move in the dollar. That's got to be. In fact, yes. These moves in the treasury seem to coincide very, very closely with the dollar. It's weird. This is unusual to see the treasury start selling at like 6:35, 8:35 Eastern time, like that hard. It's weird. That is weird. I don't know what's going on there. There's no news. It looks like something that you would think is news, but what do you think about the CFA certification? Well, the CFA certification is very difficult, and kudos to anybody that goes through and gets like the very top program. But there's no evidence that having a CFA certification makes you a better money manager or any of that. There are many things that they spend a lot of time teaching in that program that are just not true. A lot of technical analysis and stuff. So, yeah. I don't know. If I was looking to work in the industry, you know, I would be more concerned about the FINRA tests first, you know, like Series 7 if you want to be trading, handling orders, Series 65 if you want to do investment advising, and then Series 3 if you want to do futures, because remember, futures are not securities, right? So there's a different framework set up for futures. That's why there's a different framework. So, you know, like those three are like the three kind of the ones that would be most common that you'd be interested in. I would be thinking about getting one of those first before I'd get a CFA. But I haven't taken it or anything like that, so I don't really have experience. I just know that they've done studies that say that, yeah, doing it doesn't really make you a better money manager. So People treat it. I guess what I'm trying to say is people treat CFA as like this official designation that if you've taken it, you really know what you're talking about. And the reality is that it's a private program of questionable utility. They're still selling here in the treasury. They haven't reached 24, but you know, they've traded a decent amount at all three of these prices. So they do appear to be running into some supply here, but the selling continues, particularly in the 5-year. So oh, Mohammed wrote another article about how not to explain economics to the public. Ooh, how many free articles on the Financial Times do I get? There's 2 articles on the Financial Times today that I found interesting. I had some sympathy for UK Chancellor Jeremy Hunt last week when he was teased for trying to explain inflation with coffee cups and a black felt pen. I've done a few explainer videos myself over the years, so I know it is hard to get the tone right. If you want to sound as if you're talking to a smart friend in the pub, but it's easy to sound like you're pandering to children instead. I also think that making economics more understandable is a worthy endeavor, especially right now. Sadly, Hunt's video is a perfect example of what not to do. This is, oh, sorry, Sarah O'Connor wrote this. Why is it we're trying to explain economics better? Because the profession suffers from what Andy Haldane, former chief economist at the Bank of England, calls a twin deficit of understanding and trust. Yeah. 100% it is. It is that people don't understand economics and they don't trust economics. And they don't trust economics for a plethora of reasons. One being that there have been a large number of things that were kind of treated as, golden standard conclusions in the economics community that were just total bullshit. And then on top of all of that, there's so much politically driven economic research as well. So you kind of have to question some of the conclusions that they make. But at the same time, there are other things, and this is particularly true of inflation. After the inflation in the 70s, a lot of research was done about inflation. So the inflation that we're getting is a very different kind. It's been challenging for us, but we do understand a lot about inflation, especially what we need to do with monetary policy to push against it. So yeah, it is worth, trying to educate the public about what we know. In a UK survey, 40% of respondents said it had become more difficult to understand economics when it comes to making informed decisions for voting in elections and referendums. Only 14% said it had become easier. An in-depth study in 2020 found that many members of the UK public didn't understand concepts such as gross domestic product and disbelieved statistics like the unemployment rate. Part of this is a translation problem. Most economic concepts are not complicated, but they're crouched in language that makes no sense to people who don't speak it. Economists keep saying the UK has a problem with rising economic inactivity, for example, but how many people know this group includes students and careers? And carers. If someone had called me inactive when I was on maternity leave, I would have thumped them. People who aren't working or looking for work would be a clunkier label, but immeasurably clearer. Well, but no, that's the perfect example is like what matters to you in your personal life is not what matters to the economy, right? What matters to the economy is how many people are actually out there looking for work and available to hire. Doesn't really necessarily matter why they're not looking for work. Kind of matters more what can we do to get them to get into work. Okay, so 8,000 now traded at 24.5. So like what we're seeing is that as we move down, more and more volume is trading there. So that I would say is a somewhat positive sign or further downside, but it does also suggest I don't know about a liquidity hole. I mean, look, there's not a whole lot being bid there at 24.5, right? And similarly, when we go offer 290, it's not too bad. Yeah, but they took 24 pretty easily that time. So there was some signs of liquidity hole, but it kind of looks to me like there's a large meta order coming through and it's not done. And will they breach through? Well, they did just breach through this kind of zone. They got much more coming. Maybe interesting. The spread has come in here in the micros, so that is very, very interesting. Why there? Because I was kind of starting to think maybe I should be going long, but the spread coming in and the market makers being more willing to take liquidity in that area kind of is a little bit of a red flag, don't you think? Do you use footprint charts? Rarely. So I think that a footprint chart can be really, really useful because it can tell you what happened in the past with volume. So it's because if sometimes you forget, you know. But the bigger issue that I have is that people try to do technical analysis on footprint charts. They say, oh, okay, there was this imbalance here and there was this imbalance here, so I should go long. You know, any kind of technical analysis is really sketchy and suspect, you know. So dollar pushing higher here now. And I do think that the dollar has been kind of the driver behind this move in the treasuries. The dollar's not letting up, so it might make sense to try and go long here in the treasuries. I am noticing some suspicious behavior there. It passed, but they weren't bidding at 3.51, so I thought, well, let's see. Oh, are we getting something here in a minute? Oh, the red book. That's usually not a mover, but anyways, footprint charts. So yeah, being able to see the past action can be valuable, as long as you keep in mind that past market generated data is not very effective at predicting future market generated data. It just isn't. So, you know, be very wary of people trying to sell you technical analysis on a footprint chart. But it can be a useful tool. That seemingly turned. Well, okay, so the dollar is turning here. That's why the treasuries are turning. I wonder what it was that, like I said, it was a little suspicious to me that all of a sudden the market makers decided to bring the spread in on the micros. So that was kind of a hint that they wanted you to buy there. Oh, did you ask that question twice? I'm sorry, I missed that, AO. I mean, I do have footprint charts, but I don't use them very often. Okay, in this article, we're getting to the real stuff. The good news is that there are practical ways to improve public understanding and trust of economic issues. The behavioral insights team, owned by Innovation Foundation Nesta, ran a recent experiment with the Office for National Statistics that had promising results. The researchers presented labor market statistics in 6 different ways to different study participants and then tested their comprehension. The study found that simpler language, which related to the statistics to the real-world examples, led to better comprehension scores. This doesn't mean dumbing down. In fact, more information can be helpful. A version that explained how exactly the statistics were collected led people to report higher levels of trust. All of which brings us back to Hunt and his coffee cups. The big problem wasn't that he was patronizing, it was that he blamed a set of global factors for the rise in inflation, such as the pandemic and the war in Ukraine, then said the government would cut inflation by half by the end of the year through policies such as investment in renewables and nuclear. But policies like these will take years to have any effect. In truth, inflation is set to have by the end of the year anyways. The Office for Budget Responsibility forecasts inflation will be about 3.8% in the fourth quarter. This propaganda masquerading as explainer, just the sort of thing that leaves the public more annoyed and more mistrustful. Anyone can see the flaw in a story that accepts none of the blame for inflation going up but claims all the credit for it going back down. You don't need to be an economist to know when you're being taken for a fool. Yeah. Do you think the debt ceiling is a problem for markets in the future, as it seems that is not changed anything, even though the Democrats say they will borrow unlimited to pay off debts? Okay, so we have to talk about, you really want to talk about the debt ceiling. So let's talk about the debt ceiling. Because, you know, I hesitate to talk about this because it kind of requires saying some things that some people might find unsavory. Just keep in mind that the goal here is for us to predict what will happen and how it might possibly affect our trading and the markets, and not to talk about what we want to happen. Okay, so in order to do this, because trading things that are like such a politically charged issue are notoriously difficult to trade, not just because like your biases will come into play and there can just be a lot of uncertainty in those very fluid situations, but you also get a lot of misinformation, you know, because each side is really trying to push the needle their direction, you know, and so some of the very information that you get is maybe contradictory or not reliable, right? So here's how the simple heuristic that I use in these kinds of situations, first of all, is that you need to understand that incentives tend to drive people's behaviors more, seem to predict people's behaviors more effectively than what they say. Okay. But in this situation, the incentives are a little bit complicated. So just forget about the debt ceiling for a second. Let's just pretend there's no debt ceiling. It doesn't exist, or like we're well below it, or something like that. Okay. Let's not say that we're well below it. Let's just say that the debt ceiling doesn't exist. That this, you know, the Democrats put forth this law that would basically abolish the debt ceiling. Let's say that already passed a long time ago. Okay. Getting some news about the ECB here. Okay, so if the debt ceiling didn't exist, okay, would we all be singing Kumbaya here? Democrats and Republicans would be like, well, because we don't have this debt ceiling argument in the way about whether or not we're going to default, now we can talk about how we're going to reduce government spending so that we can have a more sustainable budget, etc., etc., etc. You think that they would be having that conversation? No, of course not. Come on. What does it take to get the Democrat Party to agree to less spending? I've never seen it. I mean, I guess there was kind of like the Clinton years, right? But I wasn't really that old back then. Okay, I was like 5. So in the modern era, it's Democrats are just spend. And you know what? That's where all their money comes from. So of course they want more government spending. Okay, right? Well, what about the Republicans? Well, of course, nobody wants the U.S. to default. That's going to be pretty bad. I suspect that it won't be as bad as people predict, but it would be pretty bad, right? But that's where I'm saying this is where the incentives kind of become a little bit complicated, because the Republicans, if they don't get something out of this, what's even the point of them being in Congress, right? Like if something doesn't, if meaningful policy change doesn't come out of the debt ceiling, then that essentially means that the Republican control of the House for the next 2 years was completely pointless. There was no reason, there was nothing meaningful behind it, because nothing was accomplished during that time. The budget was already passed last year, and then we're not allowed to fight over the debt ceiling, so nothing's gonna happen. Nothing's gonna happen, right? So if you're a Republican, just got elected, how are you going to be able to go back to your constituents and say we did something? Especially when what their constituents want is less government spending. Okay, keep in mind that government spending as a percentage of GDP is like at equal to all-time highs right now. Okay, so there is a lot of government spending right now. So Republicans have every incentive to push this as hard as possible to try and get something, but not actually go over the waterfall with the defaults, right? Okay. So with that in mind, yeah, it's less spending into Social Security retirement accounts, unfortunately. Did you see the study that basically showed that Social Security will be done in 10 years now? Yeah, it's starting to get a little scary. Okay. Anyways, so here's where the issue kind of comes up. The Republicans have every reason to push it all the way, like to push it into a government shutdown. So I believe that a government shutdown is extremely likely. I'm not sure about the possibility of default. Okay. They have a really big incentive to not default. Okay. But the problem is that by the time we get to that point, they might not be able to stop it. Okay. So you just got to remember that people like MTG, whether you like her or hate her, she's not going to be swayed by any of these arguments, right? She's going to be totally all for going over, the waterfall, for, jumping over the cliff and defaulting. You know that she will, and that whole group of senators would. And the issue is that those guys have the Speaker of the House by the balls. So if they push things into a government shutdown, what's going to stop them from actually causing the default, right? Because what's going to happen is in order for them to get something through, you're going to have a coalition of Democrats and Republicans do an end round around the conservative hawks, right? The conservative fiscal hawks. And then those conservative fiscal hawks have everything set up so that if Kevin McCarthy tries to do that, they can just remove him, right? Kind of sucks. Like, here's the thing. If you really want to do something about it, like it's not happening for 5 months. Why don't you just negotiate a change now? Don't say that it's in exchange for the debt ceiling. Just say we need to do something about the government, about the deficit, and we're going to make a bipartisan bill that does it. If you come in and say that, problem solved, right? And so this is the second thing that you have to understand about this situation is that Democrats want the government shutdown to happen. Okay. They've won the last 2, or is it been 3 of these showdowns, essentially, where Republicans didn't really get anything and they just kicked the can down the road saying, well, we'll do the shutdown again, right? So this is the problem, right? Democrats would like Republicans to push over the edge. That's why they're saying we're just not going to negotiate, because they could negotiate and we could just avoid the whole thing. Like they really could. But they want the shutdown to happen, and they think that it will go well for them again. I'm not so sure it will quite happen that way. There's some things different about this time around that are different from last time around that might make this a little bit more fraught. Okay, so it's a concerning situation, and we're gonna see some market volatility around it. When that happens, I wouldn't be like, oh, okay, the government defaults, like just short everything and just run it, sort of a thing. What you're gonna see is a lot of headline comes out, market moves really quickly, and then like retraces it, sort of like short-term trades, right? So that is kind of the blueprint that I would use to try and trade the debt ceiling thing. But hey, that's like 5 months away, so we don't have to worry about it today. Have you heard about quant? Yes, I've worked with it I've taken a pretty deep look at it because we've done a few videos with Optimus Futures. I kind of, went through all of the YouTube stuff, kind of gave him some baselines about how to do things, and checked out their software, and they actually put some things in there. So the big one for the Optimus Futures versions of Quant Towers, they have like built-in risk management sort of stuff, which I really, really appreciate. So I wouldn't say that it's my favorite platform, but it works pretty good. And the kind of the big selling point for that one was originally that, with some brokers you get it for free. And so I would say it's a more powerful piece of software than what was previously being offered for free. Has basically everything that you need in it. So I wouldn't say that it's the most polished, nicest, best, it's not Trading Technologies or anything like that. But as a low cost option to start, it's very attractive. Do you show your lifestyle on? Not really. Not really. I haven't really been making TikToks lately. I've just kind of lost the interest in it. I've gotten to the point where it's like I find it very difficult to find things that would really be valuable and would matter to that more general TikTok audience. You know what I mean? Not only that, but there's been all these stories coming out that basically saying that, yeah, what you all suspected is true. They totally put their finger on the scale. They come in and they say, oh, hey, we want this creator to blow up. So they go and they make them blow up. Or they say, we don't want this creator to blow up because they're ugly. So they throttle that person. And I've come in many times where I feel like my channel is like just barely starting to pick up and I'm getting interest, and then all of a sudden something comes in and just like cuts it down and all of the views go away. Now that some of that might have been like algorithm changes, but I feel like that TikTok is just putting people on the treadmill. They really do not. I really don't think they value their creators. I think that they feel like, if you go away and you're not making content anymore, somebody else will come in line and take it. You don't really get paid for making TikTok content. So, in the future, and this is going to be starting next week, we'll probably do more YouTube Shorts. I might go to recording it in YouTube Shorts and reposting it over on TikTok instead. But only when I'm seeing stuff going on where I feel like that you guys here on the stream would benefit from, a midday update sort of a thing. And so that's probably where big content will go. You're beautiful, though. Well, when I was working really actively and going down to the office, I usually would wear a button-up shirt. No tie, but a button-up shirt. Like a Brooks Brothers shirt. And then I really liked those pants from Lululemon. And they got a commuter pant that was really comfortable and I really liked. But yeah, the whole thing is over there is like the what do you want to call it, like the wealth signaling and everything. I kind of take the subtle approach to it, right? Like my approach is, hey, like if you look in the background, I own my home and it's not a bad house. Okay, that's probably a bigger show of wealth for a millennial than almost anything else right now. Is you own your own home, right? Because most millennials don't. Or I do a video and I'm holding the baby. I have 2 kids right now, right? Most people can't afford 2 kids. And I've done it here since 2020 for the most part, solely on my income, as my wife has stayed home and raised the kids. So, those to me, those are things that are like that show that you know a thing or two. But I don't know if the kids on TikTok recognize those. I always regret shaving. What you talking about? I have 5 kids. I have 3 stepkids and two children that are my genes, and one of them is developmentally disabled somehow. We're not sure the extent of it, but well, I tell you what, when we came down here to this spot, they kind of started to get stuck there, and they said, I don't know if there's a liquidity hole there, but it seems like they're stuck, you know. And then there certainly was some supply here, so now that's showing it's very, very apparent. We're basically just going sideways here now at 24. I want to be a polygamist with 10 kids. Maybe I should. Dude, I saw this TikTok the other day where this girl, they were like, oh, it would be interesting to go to a polygamist cult or some sort. So they traveled down to Nephi, it's a place, and they found like basically a polygamist church somewhere, and sat down and in the church, and like they basically got asked to leave. I tell you what, the polygamists are super, like most of them are how do you put this? They're exclusive. Like basically they don't convert people in most of these polygamous cults now, because they're hyper suspicious of anybody coming in and trying to like arrest them or whatever, you know. So they talked with them outside, but they wouldn't let them join their church or anything like that. And I'm just listening to this girl tell this story, and I'm like, you are crazy. I can't believe that you did that. What were you thinking? You're crazy. You're crazy. So I have this fidget cube I'm usually playing with, and this is the original fidget cube. Like I got this when it was a Kickstarter, and it has like a little like silicone shell so that you can put it on a keychain. And the silicone shell is coming apart, and I'm sitting here thinking maybe I should just tear the band-aid off and rip it off and just not have the silicone part anymore. So I'm messing with it. What rest is, well, it's not legal in this country. NASDAQ killer. It's not legal here. Not only is it not legal here, but the Utah government is particularly like they're looking for it because number one, so the story is this. I tell you this story, okay? The story from the Mormon point of view, okay? The Mormon church believes that they were commanded to practice polygamy in some form, okay? And I'm not gonna say, like, I think a lot of people try and present it like it's one thing, and I don't think that it really was that for them. In fact, a lot of it was just like making sure that everybody was taken care of, because a lot of guys died and things like that, okay? But I digress. They were practicing like full-on polygamy, and I think that a lot of it was like arranged, okay? And the U.S. government, Utah became a U.S. territory, and so the U.S. government started, kind of pushing against it. And there was this big move in Congress and everything to go after the Mormons, right? So there was this period where the LDS church leadership was like in exile and hiding and all of these sorts of things. And then the prophet got a revelation that was basically, if you don't stop practicing polygamy, the U.S. government is going to come and just obliterate the church and wipe it off the face of the earth. So you need to stop doing it, basically. So when the church went to that, after that happened, that it went the exact opposite way, right? Then the church and the state of Utah went out of its way to try and remove and eradicate it in any form, right? So in Utah, there are still some diehard cults that practice it, and in most cases there's like real abuse going on in order to have that happening. Like it's really crazy insane. The abuse that happens in these freaking cults, like it really is. I don't, I kind of wonder, is that like something that is prone to happen in polygamous relationships in modern times, or is it more a function of it being pushed underground? And so it kind of almost attracts that abuse to some extent. So I think that's happening with a lot with like the in some of the LGBTQ communities. They're so open that they're attracting bad actors into their thing, right? So I think that certainly seems to happen with polygamy. So yeah, here in Utah, you're if you're a polygamist, you're in hiding basically, right? But I mean, they're out there. There's the places out on the outskirts where it's like they got big compounds and everything because they're combining their income and have a 3-family home sort of a thing. It's pretty crazy. Okay, so the 5-year was able to break out to the downside, and we got another flood of volume. So, and this flood of volume is coming right in at the time when we would expect another leg to the meta order. So it appears that we are indeed getting a meta order to the downside. That was not right. There looks like that they still kind of feel attracted to the 24. We'll see if volume comes in the 10-year and the 30-year. It kind of looks like that there is a meta order short of some sort coming through. Yeah, I did take an order, and I can see all of my confirmations and everything, but I didn't see it hit. So I'm a little suspicious about that. I did not like the execution, basically. I did not like the execution. I paid up for it and it didn't clear the offer. I would prefer that it clears the offer. Tweet by President Biden: building a bottom-up and middle-out economy means investing in America, good-paying jobs, and infrastructure, innovation, and clean energy. Yeah, too bad that you're not doing any of that sort of stuff right now. I tell you what, Joe Biden's tweets are so boring. See the spread coming in a little bit. I think that's better. Fourth dead whale washes up along Oregon coast this month. Oh dear. Something going on. Weird. They're kind of just sitting there on the edge and not quite going for it. See, they're still at 3,515. So like we're still, it doesn't seem like anything too significant has happened, but like that bothers me because I would have thought that we would already see continued downside volume, and I'm not. So kind of not liking it right now. I'm gonna get out. Well, I saw that order. That one's a little disappointing to me. I think it was worth a shot. I am kind of wondering though, like, geez. Yeah, you know, it may go back down, and I'll be like, I shouldn't have gotten out, but I just did not like the way that played out, man. And especially like the spread really hurt me there, right? So let's just try and relax. If you know, maybe we miss another leg, that's fine. It kind of looks like they might work their way back up to 24 again though, so now back and forth at 23. I'm seeing some long volume coming into the 5-year as well. So that definitely has me like out. We seeing a move in the dollar here? No? You hit 30 minutes trading just to get in your trading. Well, I think the thing is that because I know exactly what I'm looking for, you know. So in that instance, I saw another leg meta order coming in, so I thought I'll try and write it. And when I didn't see the volume coming in, you know, if anything coming in the other way almost immediately, that's like, you just scratch it. It sucks that it ended up being $10, but you just scratch it. I'm honestly kind of considering flipping here. That looks like a head fake that could push up. Although, I think that my feeling to want to go long might be kind of more driven by the desire for revenge more than anything. Because if they're going to have a, you know, like a second leg of the meta order fizzles out, it's a head fake, then that's not a market that I necessarily want to trade actively, right? So put on an MES contract and put the stop at 35. Oh man, that's like way too much. You have a big enough account, I guess. I don't know if I think we're still kind of in a decision point area, and it's probably likely that we stay in that and at least until next week, if not March, right? Because the market's kind of gonna be a little bit unsure about the future until the point at which the Federal Reserve says, okay, we're not raising rates anymore. $2,500 worth of risk. That's a lot. But I'm just saying, in the current environment, that's probably going to be a lot of stress, right? Yeah, we're getting something coming in the other way here, man. I think they're playing market maker games.
So I threw an order out there as kind of a, let's see what happens. Looks like it's doing okay so far, but there was some like immediate selling in the treasury, so I'm again like hyper suspicious. Just put 200K in your account and buy a December 27 ES and go, yeah. Like, I got distracted there. What I was trying to say, Ayla, is that I like to see a trade immediately be going my way. I don't like to sit and take very much heat, right? And I'm just saying that right now for like a long-term trade in ES is not the time to get something that starts going your way and just stays going your way, right? I think we could be battling over 4,000 all year, right? We might be in a range-bound market that is sees really big up moves and then really big down moves back, and I think we're gonna have a real journey this year. So on the 5 and 30-year spread, I do see a slight amount of steepening. But again, the volume to the long side here appears to be coming mostly from the 5-year, which was what was pushing us down at the beginning too. I was kind of curious. By the 12K strike SPX call. I guess if what I'm saying is true, then probably the thing that makes more sense is a really aggressive condor of some sort, right? I've done well with those. They can be quite scary though. Well, here's the open in the S&P 500. Initial move to the downside. Not too much volume yet. Maybe seeing a few more buy orders coming through in the treasury. My first favorable ticks. So I'm keeping an eye on this bid at 24 because again, 24 was kind of like a key place for a long time, right? 400 isn't terrible, but like, look, they can take that really easily. So yeah, I'm kind of keeping an eye on if those bids are healthy or not. It looks like the spread is coming in here. 2 ticks down. Only strangles or straddles. Okay, put on a really aggressive strangle then. Obviously, the option's not really my thing. Yeah. I was thinking about that yesterday, and actually was saying, well, it's you don't get the delta. I was like, oh yeah, because really, the reason that you the retail trader likes to buy the really far out of the money ones is because as it comes closer to price, it's going to gain so much delta, right? I was kind of like, I'm not quite sure what I was thinking. I said that, but I'd say so that drop there came really easily, but like, look, there's pushback against it. Like they just sold 419, but somebody bought 684 back. It's just the offer held.
And then the guy sold again. Spreads coming in here in the micros again. This movement is kind of starting to generate activity. I'm starting to become a little bit unclear to me, though. I thought that I would see more volume long, and I'm not sure that's coming through either. So I'm not entirely sure what's going on, and the dollar does appear to be oscillating. So if the dollar starts to fall again, which is what it looks like right now, so I'm wondering if it's the dollar trade that's kind of driving this. Perhaps why there's like this weird action that we're getting. Okay. So a little bit of hesitancy from the market makers to do liquidity at 23.5. Like normally in the treasuries, well, not normally, but like over the last 2 years, when it starts to go in the treasury, it goes. And this kind of like skip across this area, when it's range bound, it's just been dead. Now what we're getting is quite a bit of activity within a range. So this is starting to remind me more of the treasury market that I remember, you know? So that makes me a little bit unsure about which way this is going to come through. It's making me question my position here. Even though it looks good at the moment. Yep, you start with negligible delta the far out of the money you start, and as it approaches at the money in the money gains delta, which is what gamma is, and that's what gives them the leverage. Yes. But then the other thing I was wondering was how high can delta get? Because I wouldn't think that you would be able to get delta much above 1, right? Is it possible to get ones that are like really far in the money and they actually have higher delta than 1? So I've never looked. Never looked and see what they were. Yeah, 1 delta is just stock, but You should expect that if you're in the money, that if the stock moves $1, that the price of the option should move $1. Well, it's not strictly. I mean, okay, yes. If you bought like at the money, put and a call, then you'd have a synthetic stock share, and then you should have 1 delta across. Sure. Oof. Okay, so I'm seeing some hint of selling. The treasury's just moved there. Man, I got faked out both ways now, huh? Oh, I don't like that. I may be willing to try one more here. I'm curious. Okay, what the fuck is going on here? You seeing that? I put my order at 3510. It is not adjusting. Is my broker playing games with me, man? It's definitely sending stuff out to the market. I don't know, man. There, that one shows up. Oh, now you show it. Now that I start to get suspicious, you go, okay, Seth, we better take it off of him. Having really? And right back up there again, huh? Wait, so what did I take before? 351. Sure looks like the S&P 500 is turning to the downside, though. Unclear what that means for the treasuries. The treasuries are shifting around a lot more than usual. I guess you could say that it's still to the downside and that now would be a good spot to try and go long rates, but I am seeing some volume trade here in the micros. I've definitely had like apparent reactions to my trades though. I'm like, so I don't want to be in a market where like it would even care, you know? Like I should be in a market where you don't want to trade against me, right? And it doesn't, I thought that maybe we were in that. I thought that there was some meta orders coming through, but it hasn't worked out that way. So I think that I should be really cautious about taking other positions. It doesn't appear like this is a market that's good for me, because what's happening is it's just kind of thrashing around and I'm losing the spread essentially on both sides. FX, macro, exchange related issues. This wouldn't happen if stocks were settled. So okay, now I see halting loads of stocks on volatility. Really? But the S&P hasn't moved that much. What is going on? FX Street News tweets gold price forecast could surge higher than 1970 from TDS. Microsoft earnings is today, huh? So there was a flash crash in Wells Fargo at the open. Something's up. Look at the liquidity is gone. Okay, so here we're getting the PMIs. That's why. So you pay attention to that services PMI. They're looking for a reading of 45, and they're polling. So this kind of suggests that this could move. It's really pulling. This is an unusual degree of pull for this for the S&P PMIs. Shit. That reaction does not make sense to me. So the services PMI was 46.6 versus an expected 45. Is that really that big of a deal to them? That was like a really aggressive sell. I really don't understand why they sold it that hard. In fact, I'm kind of like of the mind that I could sell it here. Micros and the main treasuries aren't in line with each other either. I don't know, man. Sketchy. This doesn't seem right to me. The dollar really moved there. They're going back to 102. So far, it looks like you should have gone with it, but what am I missing here today, guys? I'm really surprised by that reaction. I'm not sure if these micro yield numbers are right either.
30-year is like really hanging out at the lows, but like, man. There's a little bit of fight in the tape here. Like a buy there, but okay. I'm gonna say not a super healthy bid, but it looks like it's coming. So liquidity in the 10-year not completely recovered. You're having trouble at 28, I guess. Interesting. What the fetch is going on here? The flows here are just like completely different from what I'm used to. I'm not quite sure what's going on. It does looking bearish again. I'm not sure I understand why treasuries would see this so bearish. I am seeing like really strong pushback in the flows against this move though. But like, look, like they're continuing to push. There's some aggressive, holy shit. Well, what the fuck? I feel paralyzed. It's kind of pausing here, but it doesn't look good, man. I don't know, strong downtrend, but they're haggling over ticks. This is really weird. Yeah, I have a small position on. That's not too bad. I'm not happy about it though, so I'm gonna ditch it. I tried fading it. Well, it wasn't bad, actually. Let's say it wasn't terrible, but
If anywhere there was a spot to try doing that, that was there, but so Richmond Fed Composite Index at the top of the hour. Yeah, I don't understand why this is a 5 basis point increase, right? Like something weird is kind of going on here. And like, look at the absorption. Like they're pushing really hard. That selling was crazy aggressive. Seems like something's going on that I'm not aware of. The market goes haywire with dozens of nicey trading holds at the open after technical glitch. They don't have a story about the stocks yet, or sorry, about the PMIs. Holy crap, that was a lot. The so the circuit breakers got hit in a bunch of these. I looked like I got a good pullback, and you're not getting. Here again, we're kind of in this. It doesn't matter what you do. You don't really. It's hard to get a good price in this trend. It's been happening a lot this week. Yeah, I won't bother to pull up a chart, but I can just see them here that like a lot of these stocks, it was like the liquidity was gone and they had all dropped more than 10%, and that triggered trading halts. See, this is probably where I should be doing the reverse. It must, I mean, the other alternative here, because we did see selling before, right? And before the news. So it could be that they're just using the news as a cover for something else. I don't know. That theory doesn't seem likely, though. I can only say that the treasuries are being tricky for me today. I really don't understand why that PMI, so the market numbers is different, but the S&P PMIs, they usually don't react that strongly to them. They usually don't react that strongly to them. So seeing them move that strongly there doesn't really make sense. So I think there's a pretty high probability that we're missing something here. Some key piece of information that was in that report that really matters to the market for some reason. See, like, so, like, explain this. The news comes out, the treasuries sell super hardcore. S&P 500 is buying. How does that? That doesn't make sense at all either. S&P up, treasuries down. Did they read that PMI is that good? I mean, this inverse correlation suggests that that was like a really positive economic data point. The elephant likely took 1 foot out of that bathtub. Was a 15K drop in orders. So that's the other thing, is that's a really big drop for only 15K lots, right? Net change in cumulative delta. Okay, well, here we're going to get the Richmond Fed number now. Whoa, dude, what the fetch? The spoos just dropped there super hard. And ahead of the Richmond Fed, that's... I don't trust any movement that we're seeing in the S&P right now, man. Oh, the number is bad. Richmond Fed Composite Index -11 versus an expected -5. Why is it giving it to me? Why is my squawk telling me 10 seconds before it happens? Unexpectedly early release. It's doing it again, man. Well, I guess I'm not trading today because, like, what the fuck? I had orders out at prices that should have filled. And it's not doing shit. Explain yourself, Rhythmic. I had the right trade. Fucking hell. I've never been this mad. I've been more mad than this before. A little mad. Well, it's not the micros themselves. It's got to be, I don't know. So I'm gonna hit it. Now it hits. I don't know, man. Watch it turn back down, like right there. PCB's Peñetta is speaking. Spread is increasing on me here. Are we really still not getting any data in the 5-year? Did they like cancel it or something? You see that? Like my 5-year hasn't gotten any data in the past like 2 days. No, so sorry. I'm showing like I'm talking about the micro 5-year. Maybe I just need to reload it, but like my DOM usually doesn't recenter until there's like been changes, and it's kind of suggesting that there hasn't been any changes at all. Like it doesn't have anything to center itself on. Why after 23? Yeah, okay. It could be a problem with my data. It could be that I need to reload that or something. Okay, a little bit of volume at 19. It's like a really weak bid in iceberging. Went offer, very quickly bid back up again. Okay, that time went offer a little bit stronger of an offer, and they're already hanging at 18.5, so. I could try doing them in the 5 years. That's true. There are some things that I like about the micro 10 here, though. The thing here is that I don't think that we can explain the difficulties that I'm having here on the micro itself. I would think that I would be experiencing the same problem if I was putting them up here. It's like a data broker issue. I'm not quite sure what's going on. Okay, two upticks now. They haven't reached that high end of the range yet, but I tell you, so if this retraces, I think there's a good chance that this retraces. But if they get like above 25 in the 10-year, that would start to get like really interesting, right? Okay, came back, but there was bids holding it. Like again, so two ticks up, 2 ticks back down, but there was an iceberg at 19. So I guess what I see is maybe a slight imbalance in favor of the longs, but plenty of liquidity. The moment. Liquidity does feel a little flighty though. I don't It looks to me like it's not like they're not giving me the data in the currencies. So I do think that this is a data issue. And I'm thinking back about that that decline that we saw in the S&P 500. Like I was like, okay, I'm not quite sure I understand why this number is like so good. It's only like a 1 point difference, and this is a number that they usually don't pay too much attention to. SPOOs were up, treasuries are down, and the SPOOs like reversed it so quickly. They haven't breached 4,000 though. There still appears to be like some support there. The worry is that not only has the survey indicated a downturn in economic activity start of the year, but the rate of input cost inflation is accelerated into the new year, linked in part to upward wage pressures, which could encourage a further aggressive tightening of Fed policy despite recession risks. Is the cash index below 4K? Preliminary US PMI data was slightly better than expected, but remains in contraction. Both remain before 50 in contraction. The US headline composite output index registered 46.6 in January, up from 45 at the end of 2022. The contraction activity was solid overall, but the slowest since last October. Goods producers and service providers recorded similar rates of decline, with service sector firms indicating a notable slowdown in the pace of decrease since December. Nonetheless, companies continue to highlight subdued consumer demand and the impact of high inflation on client spending. Not a good sign for U.S. economic growth. Commenting on the flash data, Chris Williamson said the U.S. economy has started 2023 on a disappointingly soft side, with business activity contracting sharply again in January, although moderating compared to December. The rate of decline is among the steepest seen since the global financial crisis, reflecting falling activity across both manufacturing and services. Jobs also cooled, with January seeing far weaker increase in payroll numbers than evident through much of last year, reflecting a hesitancy to expand capacity in the face of uncertain trading conditions in the months ahead. Although the survey saw a moderation in the rate of order book losses and encouraging upturn in business sentiment, the overall level of confidence remains subdued by historical standards. Companies cite concerns over the ongoing impact of high prices and rising interest rates, as well as lingering worries over supply and labor shortages. Europe and Japan saw their composite PMIs rise back into expansion territory overnight, but while the US composite inched higher, it remains the worst performer among the global major economies, still in contraction. Oh. Wait, so was what happened there happened because the other economies were not showing declines, and so we just saw a ton of money come out? No, that doesn't make sense, because the euro is down. Okay. Finally, Williamson points out a problematic theme. The worry is that not only has the survey indicated a downturn in economic activity at the start of the year, but the rate of input cost inflation has accelerated into the new year, linked in part to upward wage pressures, which could encourage further aggressive tightening of Fed policy despite recession risks. Stagflation to start the new year, not exactly what stocks are pricing in. Seems like the only hope is that the Fed folds first, because soft landing this is not. So, based on what I just read there, what I would expect to see is, okay, maybe rates rise, but I would definitely see the S&P 500 sell. And that is not what happened initially off of the move. So I'm trying to sort out in my head how that information would have led to the set of orders that we saw, and I can't figure it out. Okay, that was a strong uptick. There's some offers above us, so let's see if they chew through those. The bid is like, the bids are puffing themselves up. And in fact, this whole rise up, I think I'll keep this because look at the bid liquidity behind us. I have no clue, actually. I wish that I had more effective and actionable information relevant to the auctions. So when my news squawk, financial juice, when we're getting right to the auction, they will give a bunch of information that I think paints a pretty good picture about like what the sentiment was around the auction and everything. But I don't get that information early in the morning. So I feel like that I could probably try playing the auction if I had the right data, and it's just not available to me, you know. But let's just go off of what we do know. Okay, there was a big bid there at 21.5 that pulled, and then it immediately bid back and they started hitting into 22. But I'm thinking here, I mean, there was some heavy downside action, which would kind of suggest weakness in the auction, right? You know, it's hard to sort out how much of that might have had anything to do with the auction. I don't know. I kind of feel like probably not, because there was more. It was more had to do with a data release, but over the higher time frame, the thing that we continue to see is like weak auctions, right? Where the rates rise. I'm also trying to think about which maturities they've been preferring lately. I don't think that the 2-year has been particularly strong, has it? There was another good set of positive ticks there. It was aggressive too. It was aggressive flows, particularly with the bids. Like we said, that we kind of came into some offers, and like, look, they shoved right through that, and the bids at 22, 21 half, 21 are even stronger. See, I don't know if Akshay is asking me because he really thinks that I would have insight onto that, or if he's just trolling me because he knows that I wouldn't. It sucks, right? I mean, you'll see this in any market. There's going to be, once you really get into it, you're probably going to get to a point as a retail trader where you're going to find a piece of data that's like, oh, that is like a really useful piece of data, and I can't really get it. You know? Neither, actually. I was bored. Oh, okay. Well, I can tell you this much. I'm definitely gonna, just because you said something about it, but really the price movement and the order flow that we saw after that news was incredibly bizarre to me, and it makes me very, very interested in how much interest there's going to be in the 2-year. I'm very, very interested in how much demand there will be for the 2-year this afternoon. That's for sure. I'm definitely going to be watching it. Yeah, this one's okay. I wish that I had caught it the first time though, right? I could have caught it the first time, and I could have caught it probably 10 ticks higher. If I had executed when I was placing the orders out, I would have gotten 10 ticks higher, and my data feed, it was just acting weird. Let's reset it because it looks like that 22 is a key spot. why did Spotify stop? There we go. Yeah, I could be up like 20 on this by now. So what are you talking about, NASDAQ killer? I go buy nothing. Actually, I bought, you know what? I bought a video card and the guy hasn't shipped it yet. What's with that? It's like it's sitting there awaiting feedback, and I'm like, I haven't received it yet, so why would I give you feedback? It says I paid for it. Why is it not shipped? It's been 2 days. Actually, it's been more than 2 days. I got it like Saturday. But you know what? I give you the first business day. I don't know. It's like a new. He's a relatively new seller, so I think that he may just not. I don't know. I'll have to send him a message this afternoon. Make sure everything's okay. Germany is said to be planning to give Poland the okay this week to send tanks to Ukraine. Oh man, don't get me started on Ukraine. You know what? I don't know what's going on over there, but something is happening because Western media has been awfully quiet and they're talking about sending more stuff. It kind of sounds to me like the Ukrainians are struggling right now. A decent amount been trading back and forth here at 21, 22 area. Mm, 22 goes bid and a strong bid follows it still. What do you think is? I don't know, man. The S&P is awfully confusing right now, isn't it? They had aggressive moves both ways, and it's still basically pinned right where they opened at. I don't know what's with that. I cannot explain. Listen, you know, sometimes you get into a spot in the markets where you just don't completely know what's going on. But I feel like you're almost always in that position when you're talking about the SPOOs, man. that thing just does what it wants to do sometimes. I'm glad you find that amusing, man. Accumulating, trapping here and there. It does, you know, it is kind of, it seems like we just had a situation where there should be changes in expectation about future fundamentals pushing the markets. And yet there are a lot of things in here in this market to kind of suggest that people are just kind of trading and trapping each other and screwing with each other, you know? Like this looks more like a market maker market than an informed traders market still. This overall bid in the treasuries since they bottomed, though, is still looking really strong. And again, like, we're getting really close to like the pre-news move and like where all of that balance was from earlier and everything. So the cumulative delta for this move up has washed out the cumulative delta for the move down. So there's a kind of a situation where you could have trap traders, but it's kind of hard to tell. Okay. They might already have already been stopped out. Yes, was trading nice yesterday. People expecting another good run. No, not yet. Yeah. Like I said, if you were to buy an S&P 500 contract at 4,000 and tried to hold it until the end of the year, I think that you would be sweating a lot this year. That's what I think. I think that there's going to be a lot of fraught price action across that key location. So like whenever, just remember, whenever the market seems to think that a certain price level is important, okay, like there's one thing retail traders all see this number and they care about it, right? But like 4,000 and the moving averages are something that you can hear people on CNBC talk about and stuff like that, right? Okay, so whenever you see a price level become that important, what it means is that they're gonna doink around with that price forever. That's what always happens, man. Everybody thinks that's a location to take a trade, and you just get sliced to bits across it. So that was another good solid 4 ticks. Man. So every time that we start to see like selling come in, there is a bid iceberg there to hold it. And that time at 24, and then look, they bid it back up. Okay. That time they took it. So now I'm kind of getting the low resting liquidity a little bit there. There's still a decent amount absorbing on that bid though. Like, look, now another 1,000. Yeah. What the fuck? He's like, yep, Seth, let me show you how much more there is left. And he just plops a big 1,800 lot on it. Thanks. Listen, if somebody's messing around with me, I don't want you to get in trouble, okay? I appreciate it, but let's do everything by the book, okay? Jeez. Being paranoid doesn't care about me. That's an aggressive bid, man. I haven't seen This gives me like, I'm like, am I having flashbacks? I wouldn't even call it flashbacks. Everything's by, okay, actually, good. This reminds me of 2020. You get what I mean? Like, you remember in 2020 when the treasuries just like bought like insane crazy, right? And there would be like these insane icebergs with aggressive bids following them the whole way up, right? And, you know, ever since then, it's kind of, you haven't really seen the treasuries do like a really aggressive buy, because it's even in the treasury market, because you think, oh, it's inversely correlated with the S&P and everything. Even in the treasury market, it's easier to make money when you're buying, for whatever reason. It just seems to be the way that it works out, that when they're buying the treasuries, that's money coming into the market. And you'll get these really obvious trends with, like, they just give you all of the signs. It's like every tick up, the bid is really strong with it. You can continually see the imbalance in the buys, etc., 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 right? And we haven't seen that in a really long time. And the last time I can remember something like that happening was when the treasuries just went like bonkers, right? It was like the treasuries, they went bonkers, everybody bought them up, and then for like 9 months it was just dead and nothing happened to the treasury market. And we're like, well, I don't know if we can even trade anymore. This is what this reminds me of. Okay, so they breached the top there now. So now we're starting to retrace the prices from early in the session. So the high was at 31. Just keep in mind, I don't know if we get there. This could be an area where you might start to see a little bit more resistance put up by the offers. The bet's still really aggressive though. Okay. The low in cumulative delta was negative 166. So let's just say 65. And now we are at 140, right? So they've bought net 25K. And look, here's some selling coming into you at 26.5. 3K iceberg absorbing it. Up, ticks up. Now there's a big order right there at 28. There's 28. I really always get nervous whenever I feel like I'm being forced to like start to make calls about how far this is going to go. 25K is a lot. But this continues to be persistent. You know, there's that even number at 115 just above the highs. I kind of do have to wonder if they wouldn't go for that, but we're also running out of time. Okay, so that was significant there. Okay, I'm out. Well, and unfortunately, because of my difficulties earlier in this session, that trade and me exiting right there basically just puts me at break even on the day. Probably after commissions down $5, but man, what the heck? I mean, I guess I caught the trade that mattered, right? This second one I shouldn't have done. Even though it wasn't terrible. I guess I could have held that. So the one that I took after the news, I definitely could have held that. Instead of taking the $15 loss and then held it, and it would have just been this one. So it could have been up 15, right? There was also this second trade that I took at what time did I open that one at? 7:27. So I think that the one at 7:19 made sense, but the one at 7:27 did not.
No. Yeah, that one didn't make sense. I shouldn't have taken that trade. So really, we should have been up $20 today if we had really been like on the ball. Maybe I am kind of wondering if maybe I'm a little rusty. Just I haven't. That's for me to take 4 trades in one day. That's the most that I've taken in a long time. And I'm just happy that it didn't end up being like a super bad loser day. The other thing on top of that was that they did not give me the prices that I wanted when I was putting offers out. Like I hit into it with market orders and they weren't filling me. So probably could have made $30 if I had really been lucky, right? It does look to me though like that we're getting a pause here at least. So I'm happy with my exit. I am happy with my exit. I got out at 3,506, so just a little bit. But you know, like we didn't make it back to 3.5, so it's good enough. We live trade. Well, of course, we live to trade another day. The account is huge compared to how much I'm trading. See, you guys keep telling me, you know, go and trade the 5-year, go and trade the ZN, ZF, or whatever. This is why I love the micros, is I can really trade a super small amount, and this allows me to manage my risk so much better, and that is very valuable. That is very much improved my trading, because we've come into this a couple of times. Like every time that I do have, you know, a little bit of a loss, I'm able to make it up somehow. So that means that, I mean, that's not entirely a good thing, because that's kind of suggests like revenge trading, right? But I think that what it is that I'm able to continue putting the risk on. And so I might get it wrong a couple of times, but I'm still good enough at knowing when something's going on that eventually I do catch it. You know, and that's the other thing, is that if you look at my orders here, the first one that I took was a buy on the yields here, but then everything after that was sell. So of course this first one was just a coincidence that it was a sell. This one right here is just a coincidence, but this one, these two were both, I knew what was going on, and this one was just kind of, I was too early, I guess. Should have waited for that initial flow to really die off before I tried reversing it. That was something else though, wasn't it? The flow that we saw, the aggressiveness that came through with was really something else. We need to tweet about that.
I really, we used to talk about this on the stream all the time, where people would be like, okay, so like, what is it that you will want to see on the book? And I would always say, well, like, if you're trading a lot, what you're gonna see, if there's like a really serious imbalance, what you're gonna see is it ticks up, offer gets weak, bid stacks, they take out the offer, and then immediately really firm bid, and they just keep doing that price after price after price. And that's what you're going to see in a really strong, that is like your ideal trend. That's what you're going to see on the book. And we've certainly seen it to the downside, but which was interesting, because before then we usually didn't get that kind of aggressive movement on selling in the treasuries, right? When the treasuries would sell, it usually was kind of more like they would just kind of fall through, rather than there was like really aggressive volume behind it. Okay, but we'd see it all the time on the bids, and it's disappeared for a long time. And this is like the first time in 2 or 3 years that I've really seen a bid aggressive like that. We used to see it all the time. It feels really good. I get a high from seeing that again, and making money off of it. I really get like super positive. Looks like I might have been able to make a little bit more on that trade. I'm just getting like super positive, whatever it is from it, just because I feel like this is like the old times and it was a good trade. But the market just told us something there. I'm not entirely sure what this means in the longer term. I'm definitely, well, I guess my gut says that that some people out there are hedging themselves against recession, right? I think that may be what's going on, because even though, like, yes, there was like higher inflation costs, yeah, so higher inflation input costs in the PMI numbers, that's certainly bad, and that kind of suggests that, yeah, relative to expectations before the report, that we should expect the Federal Reserve to continue to remain, let's say, vigilant, about interest rates and everything, right? But my bigger takeaway is that that means that the risk of a recession is much higher, right? Like the Federal Reserve, it really starts to paint the picture of a Federal Reserve that remains stubbornly tight all the way into a recession that becomes very deep because of how tight their monetary policy is. And then they're almost immediately forced. I don't like this, because then what happens is you're forced to lower rates. Oh man, maybe I should have kept that on. It's pushing back up really quickly. I did what I'm supposed to do for my trading. And I did get a good spot, and that we're getting a second leg here doesn't matter. Anyways, I really don't like it, because what I think ends up happening after all of that is we go into a recession, Federal Reserve is forced to reduce rates, and then when they reduce rates and the economy starts recovering, we get another inflationary bout again. And the Federal Reserve has to raise the rates back up very quickly. So I'm very concerned that this situation that we're in causes the Federal Reserve to overreact on both sides multiple times. So much, yeah. So I'm not quite seeing quite the same action that we were seeing, but there are those strong bids at 27. So I'm not necessarily, especially given my time frame and everything, the thing that was really concerning me was I was looking at this and I was like, well, you could try and hold it until the end of the session, But I'm not going to do that. I'm going to hold it until the end of my session. And if we get a pullback and a further push, that further push might not come until well after I'm done. So if I know that we're getting a pullback right now, I probably better take it. So that was correct from like that localized look, right? But this is clearly something else is going on here, because now they've already moved another 15 ticks on the micros. So this trend is not done. This is starting to look like something that is very likely to go back up to the daily highs in the treasuries. And again, like, look at that. That's a 5 basis point move. So I missed out on 10 ticks on one side and 10 ticks on the other side. So I only got 30. I only got 3 basis points out of 5. But like, what the heck is going on? That's incredibly aggressive flow. And for, you know, to see, it's not just that it's incredibly aggressive flow, but to see incredibly aggressive flow after such a reversal as we saw off of that news, super unusual. Super unusual. Very curious day today, guys. This is the most interesting order flow we've seen in months. And it's only Tuesday. They're kind of giving me the hint that they're going to turn back down a little bit, but I think that that one might be a head fake. I think that they just want to go straight up for the 115 even. Bed Bath & Beyond surges? Really? So wait, let's come back here. That this all happens on a day when there was like circuit breakers and all sorts of other shenanigans going on, and the S&P 500 is basically range bound, and chopping is also really weird to me. Okay, well, Goldman is doing well. That's cool. But what would the main proxy should be GameStop, right? Okay, so GameStop, it looks like some upside action here this morning so far. Nothing too crazy. Also, we want to look at Carvana as another one that's kind of been doing the crazy stuff, and they are also seeing similar upside. And then who are we talking? BBY. Bed Bath & Beyond is actually performing the worst out of all of those, but it's up from overnight. Oh, a little bit of squishiness there. 28.5. Wish me too. Not every day, but if we could get like at least 2 of these a week, you know, like let's say every Tuesday, Wednesday we can do this, that would be great. Yeah, I agree. Oh, you know what? I never did. I never went and checked out what the hell was going on with my 6J data feed. Yeah. So my dollar here is screwed up. It hasn't updated since. It's because they're not giving me data on the 6J. It probably requested data and got rejected and gave up, and it's just been hung there ever since or something. I wonder if I open up a second chart, maybe? Let's see here. No tick replay, please. Okay. Okay, there, it's opening up a second chart. Let's see if it loads the data or if it just churns. It's not looking too promising so far, is it? Maybe have to restart the platform. Look, there's that bid at 29 now. Ready to smash through the 30. You know, if we could get like a big collision there to close out the session, that would be fun. No, don't pull. You don't pull your orders. What? You don't want to be railroaded? Yeah. So there was a big offer at 30 that had been there for a very long time, and now 175 orders have hit into it and it pulled. So those offers look like they're shaking in their boots to me. Of course, then on the bid side, they're at 29.5. They're absorbing all of the contracts. So in a situation like this, I think this is a little bit dangerous in the current situation, but we could do like a stop limit at 30. You know, hoping that we get filled at 30 if it goes through. Because if they get through 30, pretty likely to get 30.5. If not, 115 even. Oh, looks like they got through the bid. There's 3,000 lots. That, yeah, so, The other thing that we have to consider is that volume trading at 29.5 could create a liquidity hole, right? Meaning, even if we bust through 30, oh, did I put my limit order back up there? I kind of canceled it thinking it wasn't going to happen, but, meaning they might bust through it and then come back really quickly. I think you got it to be just a little bit, because even it's a really strong bid, so that's your most important thing. But like the kind of the short-term liquidity conditions that we're getting here are, we should be concerned about a liquidity hole forming at 29.5. Right now it's fine, right? It goes bid, it goes offer. There's 600 contracts both sides. So right now it's looking healthy. That looking healthy, that does kind of suggest though some resistance, right? Well, it's about almost time for me to go. We do have an auction today, as Akshay mentioned earlier. This is going to be super interesting auction to watch, won't it? No, so I'm going to cancel this because it's definitely not going to happen before I'm done. And look, it's still not loading my 6J. I'm just going to close that. I'm probably, after the stream, I'll close NinjaTrader, try and restart it, see what happened in the currencies. Because I'm sure that a lot of this had to do with the dollar. What a trade. I don't know how to give this today like a more fancy title. It said strong bid after PMI reversal. That seems so mundane, but it really was like incredible to watch. It was an incredible trend. So one of the more exciting trends that we've seen lately. You know, I might be over exaggerating it, because I mean the first like what 3 weeks here of the year have been really dull, huh? And then, you know, December was kind of dull too, but man, it was. Yeah, and you know, but I think part of it too is that the liquidity is relatively strong today. But why did I said, oh, I'm going to keep this. Why? Because I could see that the bids were stacking all behind it. Like the overall liquidity in the market had increased, suggesting to me that a big player was at play there. So kind of hard to get out. You know, again, you get like a liquidity hole, and those are kind of spots where you can get out. It can be kind of hard to know if it'll just keep going. Look, they're busting through it now. I don't know if you even would have gotten filled at the 30. Look, only 439 contracts traded at it. Jeez. CES showing some strength. This is, man, I'm going to laugh if this ends up being like a bull day for the S&P 500. That would really just top off a really confusing day, wouldn't it? I think that the move that we're seeing here in the treasury market makes sense to me, or at least the reversal makes sense to me. And who knows, maybe everything after 25 has just been a stop run. Like maybe somebody that really thought that they had something and they were really pushing it realized that it was a dumb trade and they're bailing on it now. That could be at play. Because continued buy pressure after this, I'm not sure I can quite justify that off of that news. But I am thinking that news suggests economic weakness. And so even though the Federal Reserve in the short term might be more aggressive before the end of the year, I think that the chances that the Federal Reserve has to reduce interest rates has increased. So bid in the treasuries, yeah, makes sense. I'm not sure if it makes sense for it to be this strong, though. That's insane. It's so insane. Oh, man, I really missed out. I really did. I really did miss out, because that is now $35 further. So we got out halfway. Can you believe that? That is so insane. Well, listen, no way I would have ever predicted there was going to be that. What is a change in cumulative delta, by the way? 30,000? Yeah, there's no way. Nutso move. Hey guys, I better get going. I will see you tomorrow. In the meantime, stay excellent.